this headline says no tax on overtime, and every employee in the country reading that is like cheering. But if you're the one signing the paychecks, you need to stop celebrating and start calculating. Because as CEOs and business leaders, we are not just managing money and payroll, we are managing human energy. And what sounds like a simple tax break is actually a major shift in labor economics that could blow up your payroll or destroy your company culture and possibly trap you in high cost labor cycles. And today I'm going to break down the overtime trap and the mistakes that could cost your profit margin, the mistakes that could like truly cost your profit margins this year. But I want you to stay till the end, because the compliance clause that a lot of owners are missing could really land you in hot water with the IRS, even if the tax is zero. And so like the idea is simple. Federal income tax on hours worked over 40 is eliminated, right? It sounds like a way to give your team a free raise without it costing you a dime. But in business, nothing is truly ever free. And federal income tax, I mean, it might be zero for the employee, but here is where mistake number one comes in. The employer still pays time and a half. This is the margin squeeze. So if your business isn't optimated for 1.5 times like labor cost, no tax on overtime will just, maybe not will, but like may encourage your team to work slower in order to like really get those overtime hours. So they're working slower during regular hours, and they're really like siphoning it up in overtime hours so that they can, honey hole and get some extra hours in, and your profitability could tank in the process. Not all businesses are designed and set up that way, but that is where mistake number 2 comes in, which is the culture of burnout. Because when overtime is tax free, employees will fight for more hours, but you're not just managing the money. Our employees are what make our companies great. And if they become tired and frustrated and burn out, then they are more likely to make mistakes and be edgy. And it really causes your communication to suffer and just your overall morale. And so even though no tax on overtime sounds like a great thing, and there are times when you need to use it, we have to use overtime sometimes in some of our companies, but it's something that you're continuing to rely on as part of an employee's compensation package. Is that really the best use of those funds in your company if it's going to end up leading to burnout and turnover in the end? And before I talk about mistake number 3, I also want to say that exhausted teams can often create expensive problems. And it's not necessarily because they're being irresponsible, but they can make mistakes when they are tired and overworked. And so you really want to take that into consideration. All right. Mistake number 3, and this is not something I thought about either, but FICA is still forever. So no tax usually only refers to federal income tax, which means you and the employee will still owe Social Security and Medicare taxes on every dollar, including those time and a half dollars with no overtime tax. So if you don't account for that in the total cost of your payroll, you could have a very unpleasant surprise at the end of the quarter, right? And if your business is currently built on low margins and high manual labor, this policy shift could be the thing that breaks you. And so we need to look at your pricing and your automation right now and make sure your business stays profitable regardless of which strategy you pick. So there is a link in the show notes for those who might be interested. Mistake number 4 is the talent war. So your competitors could start using no tax on overtime as a hiring incentive or a recruiting tool, right? But you need to decide now, are you going to be like the overtime house? Are you going to be the efficiency house that pays your people adequately, but also cares about their well-being and the fact that they are humans with families and hobbies and lives outside of work, and they are not robots meant just to pad your bottom line? Because if you can't compete on hours, you have to compete on culture and base pay. And then number 5, the one I told you from the beginning, the compliance clause. So with no tax on overtime, if it becomes a forever law, so right now, as of this recording, it is between 2025 and 2028 is where it's set. But the IRS will begin looking for what's called reclassification fraud. And so you can't simply lower someone's base salary and increase their overtime to save money on taxes. So be very careful. That's a one-way ticket to an audit. And you want to make sure that you maintain strict documented hour tracking to prove that the overtime was necessary and earned if you've made some sort of salary change with them. So unfortunately, there are bad employers out there, and it screws people over. It screws the employers over. It's not fair. It's not the right thing to do. So if you are doing the right thing by your people and building a culture that is serving your mission, this is not going to be something that you're struggling with. But if you're in a culture right now where it's like, go, 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 and you know that a shift needs to come, like, stay tuned. Book a call, check out our videos on the show and our podcast if you're listening on your favorite podcast platform, because you do not have to be stuck in that crazy hustle cycle forever just to build a successful company. Because a policy that incentivizes working harder instead of working smarter is a trap. It's a trap for people that are unprepared. And in business, we don't build true wealth through more hours. We build wealth through more leverage. And so don't trade your peace for a tax break.